Hey everyone, welcome back. Today I'm talking about the stock market and my portfolio, what I'm doing to take advantage of the short-term drawdown or the little bit of stock market correction that we have going on here. It's very possible that the stock market could continue to fall as far as the indexes, the S&P 500, the NASDAQ. S&P 500 is about 5% down right now, and the NASDAQ is about 10%. Very possible that the S&P 500, NASDAQ could fall 10%, 15%, 20% as far as what I'm seeing. So what I am doing is I'm buying in stages. So now that we're down 5% on the S&P 500, I'm starting to buy a little bit of that, and I'm also starting to buy the NASDAQ as it's down 10%. So as they continue to fall, buy in stages at 5%, buy at stages of 10%, and then buy even more at 15%, and then buy even more at 20%. So not the first time that I've done this. I did it back in 2018 when the indexes fell about 20% really quick, I think in December. And then last year, about a year ago from now in March, when it dropped S&P 500 about 36, 37%. I was also buying in stages as it went down. So one thing that allows me to do that, buy in stages as it goes down, is I'm holding around 20 to 30% cash in anticipation for this to happen, knowing that it's going to happen, every 6-12 months, that we're going to get a pretty good correction, whether it's 10%, 15%, 20%, and then I have the money available to go in and buy when everything's on sale. I did end up selling a little bit up towards the top of the market, around that 39.50 area in the past 3 weeks. Not knowing that this was going to happen, but just taking a little bit of profits while prices were really high, and anticipating that we could see a correction of 5%, 10%, 15, 20, whatever coming up in the next 3 months, 6 months, sometime this year, because it seems like it happens every year. If we go look at the history, it's very common for us to get a 5, 10, 15, 20% correction once every year, maybe every 2 years. So it's a good way to a good strategy for your portfolio to hold on to cash so that you can take advantage of prices when they go on sale like this. I hadn't been buying all last year. Since like March and April, I bought a whole bunch at the very lows of that market crash, and basically was saving all my money for this opportunity. So if you want to see more of what I'm doing, hit subscribe on the channel, hit like, and I'll do updates like this in the future about when I'm buying and what I'm buying. This is not a recommendation to buy or sell. Please consult with a professional or someone that has a license to give you advice on this. What I am buying is it's called the TQQQ, so it's a leveraged ETF, and it moves a lot either way. So as the market goes down, 3 times the daily movement. As the market goes up, it's 3 times the daily movement. And I've been buying this and selling it on and off for probably about 8 years. So it's been quite a while, but definitely something you don't want to try until you get quite a bit of experience in the market and really know what you're doing, because you can lose a lot of money really fast, and then you can gain a lot of money really fast too. But that's kind of what I'm doing in the market right now, and what I'm seeing as far as a correction. Don't think it's a crash. I mean, I guess it's possible that we get a 40% correction here as well. It's always possible. But like I mentioned, I'm still going to have more money to buy even at those lower prices. So I'll be able to capture the gains on the way up, and then take some profits once everything recovers. But as far as what I'm seeing now, it's just a normal once or twice a year correction, not that big of a deal, nothing to be too concerned about. There's a lot of YouTubers and a lot of media stations, a lot of media people talking about this is such a great crisis and a great crash. And it's really not much. It's just an every year correction in the market where we get a 5% correction, 10% correction. Not that big of a deal. Prices can't go up forever. They have to breathe in as they go up. They breathe out as they come down. Breathe in, breathe out, breathe in, breathe out. Nothing can go straight up and nothing can go straight down. Also with the Federal Reserve, I see they may step in and change their bond buying program. Since the pandemic started last year, they started to increase their purchases of mortgage-backed securities, and Federal Reserve, or the treasuries, they're buying short-term treasuries. I see them potentially changing that in the next month possibly to longer-term treasuries, which will help the rates stay lower for longer. I don't see them raising rates as far as the actual Fed raising rates till 2023, 2024, so quite a while. And like they have said many times, they're not going to raise rates until this situation is a lot better and we're back at full employment for the economy. So that is going to take quite a while, and they will do whatever they have to do within their tools to allow the economy to recover fully and to get back to that full employment because of the good it does for all of us citizens here in the US. So thanks so much for watching today's video. If you guys have any questions, comments, leave them below. Once again, hit subscribe, hit like, and we'll see you in the next video.